Welcome back to Golden Rule Radio, your weekly recap of the precious metals market. And we're going to start with that recap with gold having a not surprising volatile week with a high and a low difference of about $100. But from our last recording time last Wednesday, we're actually only seeing gold down about 2% at this point. So despite a strong up and then a pretty big decline on Monday, which we're going to get into a little bit more, if you've had your head in the sand for the last few days and don't know what's going on with the markets, gold actually looking okay this week, down about 2%. Now, across the board here in the States, that's not entirely the same as we shift over to silver, down about 7% since our recording last week, and a pretty strong down period since Monday. Platinum down 6%, palladium down 5%. In the metals, gold holding pretty strong, but the industrial metals showing a little bit more weakness. Now, moving over to the equities market, the Dow indicator is actually doing the best, down about 4%, with the Dow transports off 6%. The S&P is also off 6%, and the NASDAQ down 8%, which isn't surprising because there are a couple stocks that really got shellacked this week, like the golden child, NVIDIA. Dollar up about 1% since Monday, and we will look at the dollar chart here because despite everything that took place, the dollar had a really nice technical bounce here on Monday leading out. Now, I keep hinting at a big event on Monday. That's going to be the Japanese markets, hot on the heels of a slight interest rate rise, about 0.15% interest rate rise, and a little bit of a change in the Japanese yen exchange rate. We're looking at the Nikkei losing 20%. The Nikkei, that'd be the New York Stock Exchange, but in Japan, for those of you that don't look at the foreign market.
So, Miles, when you say 0.15% interest rate hike...
Yeah, that's 0.15%. So, yeah. Literal 0.15% interest rates hike. Kind of like we've been doing 0.25% or 0.5% rises.
And it shook the whole world.
Shook the whole world. And it just shows you how much money has been built into that Japanese carry trade over the last couple decades. Because 0.15% of trillions of dollars held in overnight money over there, plus a little bit of a bump to the currency itself on the exchange rate. And yeah, Rob, you're looking at tens, maybe hundreds of billions of dollars lost this week on margin call.
On a 15 basis point increase in the rate.
Correct.
Yeah, a lot of that, remember, is just what are you doing that drives fear and panic? Direction can be enough to change trajectory also. And
to change sentiment. I mean,
yes,
consumer sentiment here in the United States is at a 45-year low.
So don't be surprised then if investor sentiment starts to follow. If the consumer sentiment is justified and becomes something that is a reality, then investor sentiment is going to follow, because if consumers aren't spending, well, then investors aren't getting much of a reward unless they're some, some serious short positions. But yeah, therein lies the issue. And these are declines across the board. I mean, this is huge volatility.
Yeah.
And you're right. It's always about that first domino, though. It's kind of like saying, you're telling me all the markets are doing this because of Bear Stearns back in 2008. It just takes that one event that tips the scales finally.
Well, the volatility index, talking about that volatility, it's the third highest high in the VIX since the VIX started getting calculated. So the 2008 market crash is the highest, and COVID was the second, and now Monday was the third, which is crazy to me because we're still looking at a market of 5, 6, 7% swings, all to the downside. So obviously very one-directional. But you're still looking at the third highest volatility index score ever.
Yes, and that goes back to 1995.
Mm-hmm. So rampant volatility and a significant amount of leverage, all on the heels of a tiny, tiny little interest rate rise. So it just goes to show you how knife's edge some of these international banking positions can be, and how addicted to a certain way of doing business a company can get, to where when you get used to taking the slam dunk yen carry trade position, borrow in Japanese yen, invest in your home country at a higher rate, pay back the Japanese yen. But if you're doing it at such a significant level that just the slightest little bit of interest rate rise and all of a sudden you're underwater, well, got to get the money from somewhere if you got to pay back the Japanese. So here comes the fire sale. And I think we saw the margin calls in Japan, which blew the Japanese market up on Monday. And I don't know if we've quite seen the margin call here yet, but I think we did see some panic selling on fear that it could happen.
Well, you just used two words that I'm kind of cracking up over. You used fire and you used water, right? And Eric in-house said volatility moves like this are like grease fires. Everyone relaxes a little bit until they lift that wet rag to see if it's still raging. It's still a grease fire, and until things are proven to be completely different, the VIX settles down, consumer sentiment reverses. This could be it. This could absolutely be the chain of events that we've been expecting in a sense. And Miles, with all of those huge declines of between 5 and 8%, gold only being down 2% shows you what an excellent balance it brings to a portfolio in terms of minimizing the drawdown on your portfolio. Remember, it is insurance, and it doesn't mean that it always goes up. Sometimes it's just a win that it doesn't go down as much.
Well, and we've seen it twice in the last 20 years where the spot price of gold would fall 20, 25%, and within a matter of weeks or even just days, the price of physical deliverable gold is back up where it was or even higher.
That's right. Well, recent memory, 2008, right, with the financial crisis hitting, everybody fled into cash. Every asset got dumped.
Right.
Everybody moved into the U.S. dollar. U.S. dollar index rallied strongly. I mean, skyrocketed. And then you see in the subsequent 3 weeks that everything stabilized precious metals wise, and everybody started converting their dollars into gold. And that's because of TARP and some of the initiation of quantitative easing, where they started flooding the markets to try to lend some stability through money printing. And then same thing with COVID, it dropped 10%. So in '08, it was a 25+% drop in gold. So listen, gold investor, don't get discouraged if, like what happened Monday, doesn't happen on a grander scale. That yes, gold can come down when everybody's moving into cash, when everybody's liquidating in panic. But to look at 2022, when the equities markets were all in a bear market and gold was up and it was magnificent, those steady declines in the equities markets can be steady inclines in the gold price. But man, when it's panic selling, there's no asset class that's left out.
No, and gold is very liquid. Traders use gold as a hedge, so when they have to meet margin calls, they can move out of their gold position, answer their margin calls. And like you said, within a matter of days or weeks, they move back in because it really is a safe haven. And they get it. They're not dumb.
No, that's right. And here we are having just a glimpse, too, of what the dollar index can do, where you did see the dollar index decline below the 103 level and gold came down at the same time, that the equities are coming down. So a lot of the approach that we take with an investment portfolio is through our investment triangle, where the three primary components of any triangle has a consistency of a growth component, a savings or liquidity component, and then a tangible commodity or an insurance component, which the metals fill. And very, very rarely, but it does happen, all three of those can contract at the same time, whereas usually you're seeing two of the three climb while one is faltering. And we'll get back to that, but it's been an exciting few days. To me, this is not changing any underlying fundamentals in the gold market, and that it presents these dip opportunities to add to ounces in. And yet, how do we ignore adding to silver?
We hit over 90 to 1 on the ratio today. We're at, what, 89.5 right now?
Right. That's wonderful. I mean, we sent out that silver buy signal in February because we were over 90 to 1 on the ratio, and silver had come down to that support level, which was just under the 22 mark. Well, here we are now coming down to that support level in the low 26. It's a higher channel. And Miles, I know you're going to get into some of this, but when you see big dips and you really haven't seen anything fundamentally change in terms of the primary metals drivers, these are great opportunities, and especially with silver representing gold at a 20% discount.
Well, my big thing with silver, and I talked about this for a number of weeks, was like that 28.70 mark, which we've now been below for a while. There was a couple little levels in here that I was looking at around 28.70. We had a declining channel that we had a clear breakdown to the 50% fib. We had a little bit of a bounce, which is pretty standard when you hit a fib level, but it definitely looked like silver was on the way down, probably breaking through that trading range it had been in, and that's what it did, going back to the end of July. So it's not surprising here to see it kind of continue. I think silver was going to continue this direction regardless of what happened on Monday or not. I'm actually kind of surprised that we didn't get a bigger reaction in silver on Monday, just given the situation. But I'm kind of surprised across the board that we've had down days across the board. But when you're talking about numbers on the Dow and the NASDAQ and the S&P up where they are, like, what does 4% even mean anymore? Like 4% in a day is nothing nowadays when the Dow is at 40,000. So it doesn't surprise me at all. Now, what I'm looking here at silver is we're pushing back into that 90-to-1 ratio with gold, and gold does look to be holding a little bit stronger, which you would expect in this sort of early phase of a potential market rollover, where we might be seeing the cracks present themselves for another increased decline in the U.S. equities market. If that ends up happening, it's not surprising to see gold holding a little bit stronger than some of the industrial metals, which are going to be more subject to that type of trading.
But gold is up 15.5% so far this year. Silver's up almost 12% this year. So that just mirrors what you just said. But still, looking back over the course of the year, they're both doing very well.
Yeah, they're both doing exceptionally well. And silver still has room to go and maintain in a strong bull market. I mean, we're talking about an almost, 40+% move between February and May, going from 22 to 32. And we're just barely below a one step backwards. We're barely below the 50% line. The 618 fib is sitting just above 26. So I've been wanting to see these numbers regardless of what happened in Japan on Monday. And what's something I've said about news for years. News speeds up or slows down the direction a market was trending towards anyway. News generally doesn't dictate the direction a market is going, but it is fascinating to me how it kind of speeds up or slows down the time it takes to get there. So we may be looking at a 618 fib correction in silver coming a little bit sooner than expected, or maybe even something a little bit deeper like a 786 correction, which puts us down sub 25. If gold holds where it is, you're looking at a 100-to-1 gold ratio again at this point.
Wow.
And I'm just moved a little money into my vaulted account, waiting to push the silver button, if I can be honest. I did that today. So I'm not one to gamble on the price of metals too much, but at this point, I've got my gold and silver position. I kind of do want to occasionally make some purchases when I see some levels get hit. So I'm prepped for this one. And I've talked to some of my clients about getting prepped for it too. So I hope our listeners are as well.
Well, and you mentioned something a second ago. You brought up news a couple of times. There are some significant news events that are being overshadowed by our political situation and what happened in Japan and what's happening with the financial markets. I mean, you had Ukraine make a major invasion into the Kursk region in Russia, took over a gas operation there, and natural gas is up how much? 10%?
Yeah, you had me check that before we recorded. I think we're up 10% on the natural gas futures. So pretty significant move. And that's here in the States. So I can't imagine what it is over in Europe.
Oh, can't imagine. But has anybody heard about that? And now we have another possible confrontation between Israel and Iran, and you're seeing oil prices increase as well. Now, people do kind of pay attention to that, but not so much anymore. There are things that are happening around the world while we're being distracted by other things that are important as well, but it's changing our life.
Well, and it does go hand in hand. That geopolitical underlying fundamental can be a very strong one. It tends to be a shorter-lived one, too.
Right.
Yes, this isn't a way to usher in winter with a natural gas spike of 10%. I know it's only early August, but if this were to continue, that would, again, be a lot of pain throughout Europe, especially in the natural gas issues that they already have due to that conflict. But all that being said, same with oil. Oil is up 3% today after having dipped. And to me, those geopolitical pushes, same thing with gold, we've talked about on this show, not the reason to remain long-term bullish. but kind of reiterates and reaffirms what its role is and what it does and the story that it can tell. And we'll just see what happens here if it gives it back. And, oppositely, people say Bitcoin is the new gold. No, it's not. It's down 10% this week. Another indication of how it's not going to react the same, despite increased geopolitical tensions, despite equity market crash, despite the yen carry trade. Why wouldn't Bitcoin be soaring right now?
Good question.
Yeah. You've got to get over the fact that it's not gold, and that's okay. Yeah. It's not to decrease its significance or the need. It's just not gold.
Well, it's not soaring because when you're in a foxhole, you learn what really matters. Like, I'm sorry, but we just lost 50 listeners who are certain that Bitcoin is the wave of the future. It ain't. Because here's the reality of it. You have a situation like what's going on politically here in the United States, Eastern Europe, Middle East, and now Japan. Oh, and by the way, China, China is just waiting to accidentally trip and fall face first onto the beaches of Taiwan. Oops, how'd that happen? So we just keep adding to the list of things going on. Well, what's strengthening right now? God love us, the US dollar is doing fine.
Mm-hmm.
Like, I'm not a big fan of inflation. I took this job 20 years ago because of inflation and how they tinker with interest rates. That's why I left my bank job and came to work here. I think that's why most of us work here. We see the evil. It's Proverbs 20:10. Diverse weights and diverse measures, each of them are alike abomination to the Lord. But the inflationary US dollar, because it is the world reserve currency when push comes to shove, it's up 1% this week. Gold's holding its own. It's down a couple of %. It's traded on the futures market like everything else, but it's holding its own. What about the things that matter? WTI crude up 5.5%, natural gas up 10%, obviously. What about the things that don't matter? Well, the NASDAQ's doing the worst. NVIDIA, the golden child of the stock markets, was down over 20%. So you really do start to learn what people actually care about. Has anybody checked the futures on toilet paper? Because I'm just having horrible COVID flashbacks. But it really is about like what actually matters when things start looking rough. What do people run to? They run to liquidity. So we run to the ability to transact in an emergency and preservation against loss. And there's the triangle thing you just brought up a second ago, Tori. You've got to have the three sides of your portfolio protecting each other.
Yeah, you've got to bring the balance. And unfortunately, I think with the dollar strength, that can be oftentimes a good thing. But oftentimes it's more advantageous to have a weak currency. But there are a lot of fingers pointing at Fed Chairman Jerome Powell on this whole yen carry trade, because all he did was say last week that there's a supposed rate cut looming on the horizon in September. We talked about it on the show, and that bolsters the yen even more. It weakens the dollar because that's weak dollar policy. And now all of a sudden the fire is lit, right? The grease fire, as Eric calls it, is lit. And yet you have people coming out saying, okay, we need to cut rates 0.5 point. Well, that weakens the dollar further. They're missing it. So this is ignorance. It's stupidity. That's just, again, pouring more grease on a grease fire. You can't weaken the dollar purposefully here, which is oftentimes a tool that they'll use to stimulate. And if you do that now, I mean, we just got a taste of what the yen carry trade dissolution looks like. The absolute destruction of that, you're talking about trillions and trillions of dollars evaporating. And it's already been hypothesized that there's been about $6 trillion in wealth, quote unquote, lost in the last week. I mean, these are immeasurable in terms of their impacts, these decisions. And yet here we have people just lightly speaking from a microphone as if it doesn't matter. It matters.
Well, that's going to do it today for Golden Rule Radio. Thank you for listening.
If you liked what you heard, you can hit the usual YouTube buttons, but better yet, why not head on over to our website, learn a little bit more about McIlvaney Precious Metals. We can be found at McIlvaney.com. You can also find us on Twitter at ICA Gold or Facebook at McIlvaney Financial. Best of all, why not give one of us a buzz here at McIlvaney Precious Metals and talk to the advisors about your personal investment portfolio. We can be reached at 800-525-9556. Thanks again for listening. Hope you have a great week.